What's up, you guys? Zoeb here from OneGlanceTrader.com, and in this week's video I've got a very simple trend following strategy that only utilizes two indicators and is 100% rule based. So if you like trend following, or if you like looking at pullbacks within trends, predefine stop losses and take profit targets, then this is the video for you. Now, before we begin, I would really appreciate if you could hit the like button, as it helps out me and my channel so much. And also please subscribe and click that notification bell, because you guys know that I'm on a race to get to 10,000 subscribers by early December, and we're nearly there, so really appreciate that. So let's get into this trading strategy. So I'm going to split this into two sections, where the first section is to walk you guys through the two indicators that I've mentioned, and then the second part is to go through the rules and an example which you guys can see on the screen at the moment. Now, in terms of pairs and timeframes, I've primarily tested it on the USD JPY. I'm pretty sure it's applicable to all pairs, but in terms of timeframes, my suggestion is the 1 hour chart. And I'll go into that in a second why I think the 1 hour chart is the best. But again, if you guys can test it on different timeframes, put a comment below and let me know what you guys' thoughts are in terms of if you prefer to test it on lower timeframes. I don't think it'll work on higher timeframes, because this utilizes daily pivots and daily support 1 and R1 levels, so I don't think it will work anything higher than the 1 hour, or you won't get a good reward to risk if you do so. So in terms of the two indicators that you need, they are firstly my OGT pivot points indicator, and again, it's absolutely free. A link is inside the description. And what you need settings wise in that, you need to set the time frame to daily, and you need to have the R1 and S1 pivot levels showing. So again, just say PP display to true. The R1 is off at the moment because the example I'm showing is around S1 levels. So, but you're meant to set that to true, and then obviously set the S1 to also true as well. And you can customize the colors and how you want the lines to display and look and all that kind of good stuff. And then the second one is the standard indicator as part of MT4, which is Bill Williams's Fractals. And the reason why we're utilizing that is to confirm the pullback in terms of the trend that we're looking to trade in, and I'll go into in a bit more detail about what that is. And the way you find the Bill Williams indicator, if you go to insert indicators, Bill Williams, and it is Fractals. So again, those are the two indicators that you need for this system to work. And as I said, this is a trend following system which utilizes R1 and S1 levels. And as I mentioned in the previous video, which you can find in the description or in the top right corner, we are utilizing the fact that daily R1 and S1 levels are hit 75 to 80% of the time. And I believe, I've not done the back testing, but in terms of the results I'm seeing, it happens more often than not, especially when you are trending. So what we're looking to do is identify a trend through these rules, wait for a pullback in that trend, and then trade it in the direction of that trend. So that's pretty much a very standard pullback trend trading approach. And I'm really liking this strategy because it's rule based, and it's all calculated through pivot points, S1 and R1 kind of levels. So let's go through an example. And what I'm going to do is actually just take a screenshot on this so I can draw on the chart as I walk you guys through it. Let's go over here. Perfect. So step one is we need to look for 2 consecutive days where R1 and S1 has been touched, and R1 and S1 have made new highs or lows. So if we are going for a downtrend, we are looking for S1 to be hit for 2 consecutive days, and for the S1 line that is printed to be lower. And if it's an R1 perspective, then we need the R1 to be hit for 2 consecutive days, and on that second day, R1 line needs to be higher than the second one. So if we look at the chart example that I've just shared, and I'll just highlight this. As you can see here, we've had S1 hit over here, and then we've had S1 hit over here. So we've had 2 consecutive days that R1, or in this case S1, has been touched. As you can see there, 1, 2, and new highs and lows. So you can see that this S1 over here on the second day is lower than the S1 of the day before. So that ticks that box there of 2 consecutive days where S1 has been hit and the S1 has made new lows effectively. So if that then breaks mode, then you have to go back to step 1. So that's the first one. So then once you've had 2 consecutive days of S1 or R1 and that S1 or R1 is lower or higher, what we do is we wait for price to retrace back to its pivot level, its daily pivot level, which in this example, as you can see, is over here. And if the daily pivot is not hit, then we go back to step 1. So we can see here on this third day, price then continued to go lower and it hit S1 straight away, and it never pulled back to its pivot level. So at the end of this day, over on the 16th, we are back to level 0.1. So if we go back to 0.1, which then says 2 consecutive days and R1 of touching R1 S1 and new high or lows. So we can see we've got one touch, 2 touch, and this S1 is lower than the previous one. So at this point over here, we have hit step one. So we're still in process over here. So we're at this level over here on this day, and now what we're waiting for, we are waiting for price to hit the daily pivot. And as you can see here in this hourly chart, this is an hourly candle. So within 3 hours of the day, we've had price that has retraced back to its pivot level, which is what we want. So we have got that piece there. We don't need any of that because we've already hit the pivot level. Now what we do is, this is where the Bill Williams's fractal indicator comes into place, and this is denoted by these kind of flags that you can see on the top here. And apologies for my drawing abilities here. Of these any fractal that's at the bottom is a bifractal, and any fractal at the top is a cell fractal. So what we're looking for is we're looking for a down fractal, this fractal over here, to print on the on the chart on the bar or bars that have touched the pivot level. And the way it works is with the Bill Williams fractals indicator, it is a 5-bar kind of setup where it will print it on the third bar where it's had 2 consecutive highs and then 2 consecutive lows. So this fractal will print on the second bar to the right. So probably haven't explained myself, and this probably isn't the best one to do it. So this little bar over here, which you probably can't see now, over here, when that bar is formed, this fractal will show above this bar. And when that happens, when we have wait for a buy sell fractal to form, we then want to enter the trade in the direction of the long-term trend. So if I just clean all this up here, probably best to do arrows, I think. So when that bar is formed, this fractal will go in. And what we want to do here is that we are looking for price to go and hit the S1 level, so to continue in the direction of the trend. So the way we do this is, I'm going to use the highlighter. Let's rub this out over here. We are looking to enter as soon as the opening of the next bar. So this bar over here, we're looking to enter that trade with the stop loss above the fractal level and with the take profit target around the S1 level and adjusted for your reward to risk. And we're looking for a minimum of reward to risk of 1-to-1. So in this particular example, if we had the stop loss up here, and again, you know me, I like to be out of trades very quickly, I would probably be targeting these lows, because that probably gives me about 1 to 1.5 reward to risk. And even though price gets this level, only gets there 75 to 80% of the time, and this could have been where the reversal changes and price could have gone back up inside that direction. So what we want to do is we want to make life easy for ourselves for high probability trades with a good reward to risk. So what I'm saying is that you can look to hit these levels here, and that might be your second take profit target. But your first take profit target, if you can find a significant low or another area where you think price will hold from a support resistance point of view with the 1-to-1 reward to risk, that is where you need to aim. So let's now go through the next day. So if we go back to where we were on step 1, over here, so this is a new day for us. 2 consecutive days R1 S1 is touched, so that's day 1, and that is day 2, and S1, the second S1 is lower than the first S1, which is what we can see. So we are still in a potential trade setup for the next day. So the day before we made a 1-to-1, 1.5-to-1, and the setup is still going strong, i.e. we're still in the trend. And what do? We wait for price to go back to its daily pivot, and as you can see here, price went back to its daily pivot and formed another fractal. So that fractal would have formed, so if the fractal is on the third bar, fourth, fifth would have happened at this bar that I've just highlighted here. And what we want to do is we want to open at the new of the next bar, stop loss above the top, and then take profit. Again, probably these lows over here of yesterday as your take profit target, or if you want to be a little bit more conservative, go for a 1-to-1, which probably would have been at these lows over here. But as you can see, again, it went all the way down to its S1 level, and that's exactly what we want it to do. And I really hope that this makes sense. And there's a lot of stuff on the chart, but hopefully you get the logic and the logic makes sense. And then let's now have a look at the next day. Let's just get rid of all this stuff here. Just really want to make this simple for you guys, that it really makes sense and you can understand what I'm talking about. So we are looking for 2 consecutive days where S1 is touched. 1, 2. S1 has made new lows. Yes, this S1 level is lower than this S1 level. So what are we waiting for? We are waiting now for price to come back and hit its pivot level, which is dignified by the blue line. And as you can see there, I can't zoom in on this particular one, but price has touched its pivot level and formed a fractal. So if this was the third bar, therefore the fractal would have come in on the close of this bar over here. Now in this particular example, you can see here we are now quite close to S1, and if we're looking to put a stop loss here and a take profit at S1, you can see the reward to risk is nowhere near a 1-to-1. Now if you're a scalper, then yeah, this might make logical sense to you, but if we're looking for trying to keep things consistent to make a minimum 1-to-1 reward to risk, personally this wouldn't be a trade that I'll be looking to get into, and therefore even though it does work out and you probably would have made your 1-to-1 beside the low that it went to at this level over here, but that's not what we're into. We're not into looking at stuff if buts and maybes. We are trying to stick to a trading plan and stick to our rules, and our rules state even if the daily pivot is hit and it forms a fractal, if I can't put my stop loss above or below that fractal with a reward to risk of a minimum of 1-to-1 to the S1 R1 level, I do not get involved in this trade. And that is the overall logic. So if we just go back on this trend, so the start would have been here, so this would have been no trade because price never got back to its pivot. This would have been a trade and you would have made 1-to-1 out of that. And again, this one here would have been variable, and you would have made at least 1-to-1 out of that one. This one was a valid trade, but the 1-to-1, if I can actually do that properly, that 1-to-1 was not hit, so therefore it is not a trade. So out of the 4 days that we looked at this trade setup being valid, and then as you can see the next day, price didn't even hit the I think R1 was about here, so I think it hit R1, and therefore we don't even look at this trade anymore, and then we start looking at if R1 is hit 2 times in this particular example. So out of the 4 days that we got valid trade setups, we had 2 trades, and both trades you would have made 1-to-1. Now you can just imagine over multiple pairs, and you know the confluence that various pairs has. So if this pair is trending, more than likely that the USD CAD or GBP USD will be trending in the opposite direction, and negative and positive correlation. So there is a number of pairs that you can trade with this system, and you know, even if you we're doing 1% risk or 2% risk, that's 4% in a week, and etc, etc. So again, there are times where it doesn't work, and let's just say that you are in a trade. It's happened to me once only. I've either hit my stop loss, or I've hit my take profit target in the same day that the trade was created. Let's just say there's an example where you're in a trade and the day ends and you're still in the trend. Now again, it's completely up to you. You can either wait and see that whether you get your stop loss taken out or you hit your take profit target. In my personal opinion, if you're in a trend, and we're looking at this example over here, if your take profit target has not been hit, more than likely that this is a strong indication that price is actually going to reverse. And what I would do is I would cut your losses, whether you're in a small profit or in a small loss. I would just close out the trade at the end of the day, because if you're not continuing, and I've done a lot of this stuff now, is that if you're continuing hitting S1 and then S1 is not hit, then it looks like that either price will start ranging or start reversing inside that direction. So my advice is you close the trade out by the end of the trading day, regardless where you are, and take a small loss or a small win. But that's the concept. Again, you can put other layers, trend dashboard, ATR, ADRs. You can put all sorts of other confluence factors on top of this, moving averages, trend lines, all that kind of good stuff in there to really hone in on your entry. But in this example, I've tried to keep it really simple for you guys, trying to give you a basic rules and strategy that you guys can follow. I really think that this is a tremendous strategy, and I've been utilizing it now for the last 3 weeks, like I said, particularly on the USD JPY, and now I'm going to look to expand to do it. In terms of automating this, because I appreciate that this is quite I need to test and look to see when the pivots hit and all that kind of good stuff. I'm looking to see how I can automate this through my current suite of indicators to give you alerts, or even a dashboard of some sort that S1 has been hit 2 days inside a row, so therefore you can scan the pairs quite quickly and only look at the pairs that you need to look at. So look out for that, but I really need some feedback from you guys, because I want to make sure that I'm spending my time and my team are spending time creating indicators and EAs that you guys want to see. So really appreciate if you could comment below. Again, like this video. What I'll do is I'll put all my other strategies up now that you can see, my trend following and my other pivot point strategy as well, that you guys really liked as well. But I really hope that you take this concept, make it your own, and I really hope you can use it inside your trading plan. And I shall see you guys shortly. Click the videos that are up on the screen now.